Investors clearly like what they see from JD Logistics. Do you as well?
Yes, we do. We're very excited, I think, about the spinoff in general and what it's going to be able to do to sort of decouple JD.com from JD Logistics. There's a lot of emerging properties, whether it's Douyin or Kuaishou, that are coming into the market, and really being able to have that back-end support without going out to build that massive amount of warehouses or the frontline workers is going to really lead to a very big acceleration in a lot more platforms coming to market. So I think JD Logistics, fits in very well with the regulatory plans of the Chinese government in breaking up these monopolies and really allowing them to go get a new customer base operating independently like they are now.
Okay, and getting that new customer base absolutely crucial, as you rightly point to. The reliance on the parent company, JD.com, how much of a vulnerability is that?
Well, I think it's probably more of a vulnerability for JD.com than it is JD Logistics. JD.com is still by far their largest customer. But now that they're independent, and there's so much that goes on with data sharing in China too, but that's really going to make other platforms and other brands feel more comfortable using JD's logistics products to help with their fulfillment, not only domestically, but also with what we've heard with a lot of that capital being going to the worldwide network and the overseas warehouses. There's going to really be a lot more that they can offer, sort of outside of that ultra competitive domestic fulfillment.
And the CEO was very clear when I asked him about the path to profitability, which is that it's not a priority. He wants to focus on investments. Is that the right strategy, do you think?
Yeah, it is. And it was good to hear that, because domestically, too, there's been a price war that's been going on for about 12 to 18 months where everybody is really fighting it out for market share. So much of that next day delivery or even a couple-hour delivery that really gave JD that advantage initially has been eroded. And now it's turned into more of a price competition or price war. So the fact that they're expanding on new technologies, making themselves more efficient, expanding globally is great news. And as well as, removing that moat that stayed around JD.com with JD Logistics, that's, I think, is going to, eventually be their path to profitability and being able to outlast the competitors in these price wars too. I mean, they just have a whole bunch of capital to be able to do that with now. So long term, and I think investors are agreeing with us that what we're seeing with the stock price right out of the gate is probably indicative of what's to come for JD Logistics.
Jacob, David there, is there too much competition? Because well, for one, there is a trend even before you had a lot of these tech companies, of course, vertically integrate, their own logistics assets and then spin them off like you have today. You already have existing players as well. So I'm looking at this, and to your point, this company's not even making money, and they don't have any priorities of making money. Why is this a good investment to have?
Well, I think that in general, there is, again, they are focused very much right now on domestic fulfillment. And that's where the problem of the profitability is going to come in, because, we, ship out tens of thousands of packages a day. It is a bombardment of the newest, latest offer. And I am blown away. I mean, we are getting next day delivery in China through couriers at below the cost of a postage stamp in the United States. And that's where the market is today. However, that's not going to last forever. The prices of cross-border fulfillment are rising quite a bit, so that there's going to be a lot of margin in that game when they get involved in it. And again, being able to expand that customer base beyond the 2 to 3% market share that they have right now is now going to be an option as well. That's going to bring economies of scale as they go forward, making that path to profitability certainly something that's going to happen for them in the long run.
Right, and I'm not sure if you see this on the screen, so we have a pie chart essentially of this highly fragmented market. The biggest player is about 20% of the market. Jacob, in your view, at what threshold of market share do you then gain pricing power and investors perhaps look at this more than just a cost center?
You're probably at about that 20% mark. And I think also not only is it overall domestic market share, but you have to look at where they're operating as well. I mean, if you were to look maybe in tier 1 cities, you're going to see their share be a lot higher there. But one of the things that they're looking to deploy capital on, again, is the lower tier cities. where the competition in Sinow has reached out and done a little bit better job and gotten ahead. So we hope to look at them to take market share there. But again, first tier cities, more expensive to operate. JD has been great at treating the frontline staff very, very well. This costs money, and as they move out into these lower tier cities, hopefully those margins can improve there as well.